Hello guys, it's Chat Blueprint here again. Welcome back to my channel. As cliche as this might sound, there are certain levels in the market that provides you with higher probability setups. Personally, I call these levels areas of potential trade opportunities, APTO for short, but then the majority of traders refers to these levels as areas of interest. Now, believe me, I am only looking to see price trade into these levels being my areas of potential trade opportunities or areas of interest, as the majority of traders would call it. After I have identified these levels, only then would I be confident enough to look for buying and selling trade opportunities when once price trades back to these identified levels. If you stick around till the end of this video, I'm not only going to be showing you how best to identify these levels in the market, but also what to do when price reaches these levels. Now for this, I'm going to be using volatility 50 1S index as a case study. When it comes to identifying areas of interest, the very first and most important thing I need to address is knowing or understanding the market's bias. Now, this has to come first before you can go ahead to identify your areas of interest. Understanding or identifying the market bias has to come first. Where is the market headed? What is the direction of the markets? What is the trend, the current trend of the market, the dominant trend of the market? Now, taking into consideration the volatility 51S index chart in front of my screen right here, what you notice is the fact that we're currently in a bullish market structure. Now, if you don't already know how to identify the structure of the markets, I would suggest you go look up my previous videos. As I've gone in details to teach on that on subsequent occasions. But very quickly, you can get to see, whilst we saw the market clearly headed to the downside, pointing us with lower highs and lower lows, with this being the most recent swing low, lower low, we can clearly see we've had to see price trade out of this downtrending market move after presenting us this bullish price rally to the upside that left us with a higher high. So previously, you can see we kept on pointing lower highs, lower lows, lower high, lower low, lower high, lower low. And now you can see very evidently and obviously price has given us a higher high. So yes, we have ourselves a structure shift from bearish to bullish. Safe to say, currently we're having to see the market now in a bullish condition, in a bullish sentiment. And once we have the market's direction very clearly identified, then we know what trade opportunities we want to look out for. So having seen the market now on the daily time frame in a bullish market structure, we only want to look for buying opportunities, trade opportunities that are in line with the dominant market structure. So first things first, before you go into identifying or establishing your areas of interest would be what? Identifying the market's structure, the trend of the market. And as you can see right about here, we have ourselves a bullish trending market on the daily time frame charts of volatility 51s index. As I've clearly established us, having seen price pointed us a bullish rally to the upside that left us what with a higher high right about here. And then also, if there's one thing that confirms the current structure of the market would be the fact that I don't make use of trend lines very often, but then would notice we have clearly broken out of this downwards counter trend line and clearly where the market is looking very bullish and likely going to continue head to the upside. And if I would go a step further, I'm likely anticipating this as a potential take profit level target, first level take profit target for the bullish move to the upside on volatility 51s index. That being said, first things first, establish the market's trend, the market's direction, clearly headed to the upside. Having fully established the market's direction, then of course we know we want to trade in line with the dominant trend because of course the daily time frame chart right about here on our screen is in a bullish market structure in an uptrend. We only want to look to buy. We only want to look for buying opportunities. And now, having identified the trend of the market, this then takes us to what? Identifying areas of interest. Areas of interest simply are higher probability levels where we then want to look to see price trade into to get in on buys because this is a bullish market structure. This is an uptrending market. And then we only want to look to buy. Identifying the areas of interest for buying trade opportunities. Now, how then do I identify the areas of interest? My areas of interest. Now, areas of interest for me are levels or areas where price has repeatedly found support and resistance. Take note of the word here, repeatedly. Price needs to have found support or resistances repeatedly. Repeatedly, by repeatedly, I mean a minimum of 3 times. So these are levels or areas where price must have found support or resistances at least a minimum of 3 times. When once you can identify these levels from the chart, then of course you have yourself what? An area of interest to wait for price to come into to then look to get in on buys. Now, very quickly, we would go a step further to identifying a perfect level area of interest on V51s index right here. Now, if there is anything that is worthy of note, guys, it would be the fact that I am only looking for areas of interest within a certain price range. Now, what do I mean by this? Clearly, having established the market structure to the upside in a bullish condition, an uptrending markets, where we have ourselves what this being the most recent swing high, the higher, and then of course we have this being the swing lows that led us to this higher high. Having said that, I'm only looking for areas of interest within a price range, that would be within the current higher high and then this swing low. So if I'm looking for an area of interest where I then want to get in on potential buying opportunities in line with the uptrending market of volatility 51s index as seen from the daily charts right in front of our screen. Anywhere within this price range is where I want to identify an area of interest. Anywhere within what? The current swing highs and the most recent swing low. Because if for any reason price trades past this level, I'm certainly no longer going to be looking to buy volatility 51S index, because then, of course, the market structure would have shifted again to what? To the downside. Obviously, we would have ourselves what? A lower low, which is not a characteristic of an uptrending market. So for as long as price keeps trading within this price range, within the most recent swing high and the most recent swing low, I am only going to be looking to buy volatility 51S index. Only when once price breaks out of this range would my bias for volatility 51S index then change from bullish to bearish, from buying to selling. So areas of interest, I will only look for that anywhere within this price range, the current swing highs and the swing low. That being said, the next thing that comes to mind would be, how then do I identify an area of interest? Like I previously said, for me, there are areas of support, levels of support and resistances, or rather areas or levels where price has repeatedly found support and resistance. Now, very quickly, for me, this is second nature. I know this might be very complex for quite a number of persons to figure this out, but it's simply easy for me to do this because I've pretty much been doing this for the longest period of time. But I guarantee by the time you pay attention to this video and go over it a couple number of times, and then with a little more screen time and practice, you'll get to see this very easy also. So now, areas or levels where price has repeatedly found support and resistance. What then comes to mind would be, guys, pay attention. You can see at this point we had what? We had a support right at that level. We had price found support at that level. Right here, you can see we had price found support at this level also. Support at this level. Now take note, guys, anywhere within what? The current structure range, the current swing high and the current swing low is where we want to find our area of interest. So you can see we have ourselves price found support right here, price found support right here, price found support right here. 3 times. You can see we have ourselves here, price found resistance. So we said what? Any level or any area where price has repeatedly found support. Repeatedly being a minimum of 3 number of times. You can see 1, 2, 3, 4 times we have found what? 3 times we have found support. 1 of the times we have found resistances. So for me, that would be an area that is what? Is very peculiar to me. I've been seeing repeatedly we have had significant price actions for every of the times we tested the level. Price actions being the fact that we've bounced off from the level, finding support and resistance repeatedly. Now, once I've been able to identify this level, I always love to come in and then what? Bring the rectangle tool to accommodate the level, just to make this even more clearer, as you can see. Now, guys, you can see, bringing the rectangle tool, this looks even more clearer. You can see right about here, we had what? Price found support for bounced off to the upside. Right about here, we had a break above the level, we traded back to the level, and you can see we had what? Support from the level. Right about here also, we tested the level where we had this price sell-off to the downside. And as soon as we tapped into the level, we had what? Support from the level. We had a break below the level, as you can see. We quickly retested the level. You can see what? Sell-off from the level. Came back to the level right about here a second time, and you can see what's the weak rejection from the level, with price finding resistance also from the level. So for me, that would be what? My first level area of interest. First level area of interest within my swing high and swing low level, like I've previously said. So first level area of interest, as you can see, 1, 2, 3, 4, 5 times, price has repeatedly found support and resistance right at this level. Now, if there's one thing I always like to do, is what? Go a step further to see if I have myself a psychological number present at the level. And very quickly, I can already see a 176,000 psychological round number present at the level. Now you can see this keeps making more sense. And now, guys, we have ourselves what? An area of interest. Now, as soon as price keeps trading above this level, for me, guys, I don't yet have a trade opportunity until price comes back to this identified level area of interest. So clearly, this is my identified level area of interest, owing to the fact that what repeatedly price has found support and resistance from the level. For every of the times we've tested the level looking to the past, we've had to see significant movements to the opposite direction. And then we also are present at the level 176,000 psychological round number at the level. So this, for me, is a potent level area of interest. Now you can pretty much do this and then keep going for on every one of the different time frames to identify these. The rules are pretty much the same. Be it the daily, the 1 hourly, the 30 minutes time frame, or the 15 minutes time frame, every one of the rules simply remains the same. The first thing would be what? Establish the market's direction first on whatever time frame you are looking at the charts from. If you're on a 15 minutes time frame, if you're on a 1 hourly time frame, the first things first before identifying an area of interest would be to establish the trend of the market on that very time frame. Once you have established the trend of the market, then of course you know what trade opportunities you want to look out for. Because if you're a pro-trend trader like myself, having known the market's direction now gives you a trade bias, because of course, as pro-trending traders want to trade in line with the market's direction, with the market's trend. Once you have identified the trend of the market, then of course you can move a step further to identifying the area of interest on whatever time frame you're choosing to trade from. It's simply what? Looking at any level or any area where price has found support and resistance repeatedly, a minimum of 3 times, guys. It's so important because what? There seem to be significant price actions that takes place for every of the time price tests that level. That's the very reason why the level becomes what? A significant level where you're looking towards getting on trade opportunities from. Because every of the time price gets to the level, there's some sort of significant price actions that keeps taking place there. Now, you have to understand, guys, if there's something that's very peculiar with the market is what? Repetition. What price has done before, it will most likely do again. So we are taking our bias on the market based on what price has done in the past. So now it's one thing to identify your areas of interest. It's one thing to identify an area of interest. It's another thing to know what to do when one's price comes to your identified area of interest. Because like I've pretty much established, you have to identify an area of interest, having established the market strength, and then wait for price to come into the area of interest. You're only going to look to buy and sell from what? Your already identified areas of interest. So having identified, the next thing you want to patiently wait for price to come to the identified areas of interest. Now, guys, take note, this is very, very important. Once you've identified the area of interest and then waited for price to come into the area of interest, as soon as price gets to your area of interest, what then do you want to do? You always want to look for similar price action patterns. You always want to look for similar price action patterns as before when price was at the level, when price tested the level. Now, the more similar the price action patterns, the higher the probability the outcomes will turn out the same. Now, quickly, let me explain what I mean by this. So clearly we can see we have had the price rally to the upside, presenting also what our higher highs. And then we must have identified this as our area of interest. 176 psychological round number. And now, because we're above this area of interest, this is expected to act as a support in line with the fact that what we're looking to buy volatility 51s index from the daily time frame because we are in a bullish market structure. And then having seen what that price is currently undergoing a retracement, and then you can see we've come into what our identified area of interest. Now, this is where you want to look at for what? Similar price action patterns. What do I mean by that? Let's pay attention right here. So the first time price came to this level, what do you notice? We tapped into the level. We had what? A nice rejection candlestick from the level, and then we had what? A bullish movement to the upside. You can see right about here also, we had a break above the level, a retest of the level. What would you notice? A rejection from the level, price rally to the upside. The second time, guys, right here, a third time, what would you notice? We traded back to the level, a rejection from the level, and then what? A bullish movement to the upside. Guys, we had a break below the level. At the retest of the level, what then would you notice? A rejection from the level, price sell-off from the level. Now you can see for 4 consecutive times, we're about to see what? That every of the times price came back to the level, the bounce off from the level was preceded by what? A price rejection from the level. As you can see very clearly. And now you can see also, now we're above the level, we've traded back into the level. What then would you notice? We had ourselves what? A nice daily rejection candlestick from the level. So 2 days ago, we had the daily candlestick close as a nice rejection from the level, guys, just like it did right about here. Just like it did right about here. So what would we expect? Like I said, the more similar the price action patterns, the more likely the outcomes are going to be what? The same. So if what? During this time, we had what? A rejection from the level and then a bullish movement to the upside. Also, here we had a rejection from the level and a bullish price rally to the upside. Right about here, the same thing. If for any reason, as soon as we tapped into the level 2 days ago, we had ourselves also a rejection from the level, we would be expecting that what the outcomes would also be what? The same. That goes to show that what I'm very much expecting and anticipating that the price rally would kick off from this level, and then we'll tend to see the outcomes as we did right about here, and right about here, and right about here, play out almost the same. Now, guys, even if we tend to move the charts much further behind, you can see that I'm not making this up. By extending my rectangle to a bit further to the left, you can see this keeps repeating itself. Even from 8 months ago, January 2024, you can see what ourselves, what we're tapped into the level right about here. What would you notice? What a perfect rejection from the level. And then what? A bullish rally to the upside. You can see right about here. What a breakup of the level, a retest of the level, rejection from the level, and then it was a bullish price rally to the upside. So you can see that for every of the times we have retested this level, which is our identified area of interest, if you had gone a step further towards, do the very next thing I always want to do, and that is what? To pay attention to the candlestick patterns that forms at the level. The more similar the candlestick patterns that forms currently are with the candlestick patterns that formed previously when priced at the level, the more likely the outcomes are going to be the same. And because I've noticed that what the last 2 days ago, the daily candlestick closed as what? A rejection from the level. I'm pretty much expecting that the outcome would be what? A bullish price rally to the upside. Now you can see how easy it is to identify an area of interest. And then what's the very next thing to do when once you must have identified your area of interest. Now, having fully identified the area of interest, this is where you can then what? Go to every one of the other lower time frames, like I always like to do. I love to identify my areas of interest from the higher time frame because I'm predominantly a swing trader. I go to the daily time frames, preferably, identify my areas of interest, and then I scale down to the lower time frames to look for entries in line with the dominant time frame bias. So when once price comes into my identified level area of interest, that's when I then scale down to the lower time frames to look for confirmation entries, in this case for longs. Now, very quickly, if I take this down to the 4-hourly time frame, because what you tend to notice is the fact that while we have the daily time frame in the bullish market structure, scaling down to the lower time frame, where I usually get my entry executions from, I always love to see that there is a case of correlation. Correlation being the fact that I always want to have the lower time frame trend bias in line with the higher time frame bias. So clearly, if I have the daily time frame in a bullish market structure, and then of course coming down to the 4-hourly time frame, where if I would love to get in on longs from the 4-hourly time frame, I would love to see for a fact that the 4-hourly time frame is also in a bullish market structure. As you can see very clearly, we're having ourselves also the 4-hourly time frame in a bullish market structure. Having seen that we had this nice price rally to the upside that pretty much took out this previous lower high, right, about here, shifting the market structure from bearish on the 4-hourly time frame perspective to bullish, clearly with price bringing us our higher is right about here. And then, of course, we had ourselves this being the swing low that led to the higher is right about here. So clearly we have the daily time frame in the bullish market structure, the 4-hourly time frame also in the bullish market structure. So I have a clear case of a clear case of time frame correlation. The daily time frame and the 4-hourly time frame clearly correlating. And as you can see, we've had the nice pullback coming to if our daily time frame identified area of interest. And what you notice is the fact that now when it comes to identifying the areas of interest, having fully identified the area of interest, if there's the next thing that I love to always do, scaling down to the lower time frames. If I must get in on a buy trade, I always want to buy from a higher low. If I must sell, I always want to sell from a lower high. So I only want to sell. I want to buy from a higher low. Now this, of course, means going down to the lower time frames where I get my executions. So I only want to buy from a higher low, and I only want to sell from a lower high. Buy from a higher low, sell from a lower high. So now, of course, coming down to the 4-hourly time frame, should I be looking to get in on buys from the 4-hourly time frame? I would only want to get in on buys from a potential higher low, rather. I think I should change that, potential higher low and the potential lower high. So clearly, having seen price printed us the higher high right about here, I cannot buy from this level because this would be a higher high. So I want to see price come and then give some form of retracement, some form of pullbacks, which would most likely come into my daily time frame identified area of interest. So this would most likely now look like a potential higher low. So this is not yet a confirmed higher low. This is just a potential higher low. It's only going to be a confirmed higher low when once it takes out the current swing highs right about here, or once it creates a bullish price rally to the upside that takes about this higher low. So this is a potential higher low. So if I must buy, I want to buy from a potential higher low. And clearly you can see we've had our potential higher low form very nicely at a daily time frame identified area of interest. And then this is where, of course, again, I want to get in on my entry confirmations. Entry confirmations for me would be the rejection candlesticks on my execution time frames, and then the bullish momentum candlestick. Clearly, from the 4-hourly time frame, should I be looking to get in on longs from this time frame? I've clearly had myself a nice bullish engulfing candlestick, a nice bullish momentum candlestick that formed off the daily time frame identified area of interest, formed off the 176,000 psychological number. If I would go a step further to bring in my Fibonacci retracement from current swing lows right about here to the most recent swing, guys, you can see we have the bullish engulfing formed off the 50 exponential moving sorry about that, of the 50 Fibonacci reversal level. And then you can see how the take profit level, as identified previously from the daily time frame, is aligning perfectly with the Fibonacci 272 extension level. So and then lastly would be the fact that bringing in my 50 exponential moving average also. So I quickly want to get the 50 exponential moving average up here. Now, if I introduce also the 50 exponential moving average, now you can see we have also present at the level is not just our retracement coming into the daily time frame identified area of interest, psychological around number 176,000, or we seem to be having our potential higher low form of the level. You can see we have a nice 4-hourly time frame bullish engulfing candlestick, bullish momentum candlestick, which is an entry confirmation form of the 50 exponential moving average also. Now, if I'll digress a little bit, guys, now you can see, looking to the past, for every of the times we were beneath the exponential moving average, you can see while we traded back to the exponential moving average, what would you get to notice? We had what? A bounce off from the exponential moving average. And even though we had price repeatedly kept being drawn to the exponential moving average, but because we're trading beneath the exponential moving average, as soon as we tested the exponential moving average, you can see the exponential moving average kept on acting as what? Support, resistance rather. We're, we're drawn to the exponential moving right here, but because we're trading beneath the exponential moving average, we're at what? Sub resistance also. Sorry about that, guys. You can see right about here. So you can see quite a number of times repeatedly, even though we kept seeing price being drawn to the 50 exponential moving average, we're about to see that the 50 exponential moving average had pretty much acted as a dynamic resistance for every of the times price tested the 50 exponential moving average. And you can see for a long period of time, we have pretty much been trading below the 50 exponential moving average. And only some few days ago did we have what? The 4-hourly time frame candlestick break above the exponential moving average. And now we're clearly trading above the exponential moving average. So we would very much be expecting the same thing to happen when once we get to retest the 50 exponential moving average. But in this case, the reverse would be the case. We would expect the 50 exponential moving average to act as a dynamic support because clearly we're trading above, which of course that has pretty much happened. So you can see we've had our bullish engulfing candlestick formed off the 50 exponential moving average, off the 50 Fibonacci reversal level, off the daily time frame area of interest. So that could have been an entry confirmation for longs, having had the nice bullish engulfing candlestick, and then I have our stop loss just below, and then wait to see our price gets into this 272 Fibonacci extension level for our take profit level targets for a decent 1 to 3 risk to reward. But now, guys, I'm always looking to get the most of the market movements. As such, I always want to go to the lower time frames as much as lower as possible to capitalize off the already identified buyers of the market and then give myself a nice and decent risk reward rates. And this is where I would go a step further to the hourly time frame. And even though I had pretty much gotten myself a buy entry yesterday, a quick buy entry for a 1 to 3 risk reward, I'm still very much looking to go in for longs again from this. Okay, so I add a 1 to 3 risk reward trade from this level yesterday. Yeah, somewhere around here. I had a quick 1 to 3 risk reward trade. If you are clearly in the Telegram channel, you would see where I sent at the proof that I got in on that trade. Now, in as much as I have had myself a nice 1 to 3 for buys, I still very much, or rather, my bias for volatility 51 index still remains very bullish to the upside, and I'm still looking to get in on longs on this. Now, coming down to the 1 hourly time frame, I pretty much would be looking to go in for longs from the 1 hourly time frame. So what I would love to do, like I said, is love to have my execution time frame in correlation with my dominant time frame. In this case, the dominant time frame being the daily time frame. Clearly, that's where I have established the dominant trend. And clearly, I've established what the market's, the area of interest also, being the 176,000 psychological round number, somewhere around here, where price is currently trading at. Now, the next thing that's worthy of note is the fact that, having said I always want to have the execution time frames and then the dominant time frame in alignment, clearly from what we can see right about here, obviously and clearly we have the 1 hourly time frame in a bearish market structure. Now I know this can get very complicated, especially when we start seeing price giving us a complicated accumulation phase like the one we're having right in front of our screens. But then what you tend to notice is the fact that what makes this much easier, we had ourselves this as a higher high. So you just trace that to find out the support that led to that highs. You can see that's this level at about here. So this becomes a higher low. This becomes a higher low. And now what can you see? You can see currently we are seeing price trade what? Way below the higher low. So price is giving us what? Lower lows. I hope this makes it much simpler to identify the market structure in a complicated accumulation phase, just like we have right about here. So clearly we're having to see what price giving us a lower low. So this, of course, is not a characteristic of an uptrending market. For an uptrending market, we want to see price giving us what? A series of lower highs, series of high highs and higher lows rather. And then if you notice, I said previously that if I'm looking to buy from my execution time frames, execution time frame in this case, I'm looking to get in a longs in line with the daily time frame directional bias. I am only going to be looking to buy from a potential higher low. But clearly now you can see the 1 hourly time frame being my execution time frames. This is what? A lower low. So I cannot what? I cannot get in on buys just yet. If I must buy, the rule says what? I must buy from a potential higher low. Then of course, this takes me to the fact that what? I would love to see price do this. Take out this. been the most recent swing high. So when most price takes out this level, gives me a higher high, which then, by the time that happens, would have shifted the market structure on the hourly time frame perspective from bearish to bullish. When once I have a higher high, like I said, I only want to buy from a potential higher low. I then would wait for price to give me a pullback or retracement. So come into, again, an identified area of interest, most likely where I would get the potential higher low to get in on buys. Now, very quickly, if I would want to identify an area of interest very quickly, like we had said, the area of interest would be a level where price has repeatedly found support and resistance. It's much easier for me to do this. So if I have this from B, just merely looking at the charts, I can tell this would be my area of interest, because very evidently or repeatedly, price has found support and resistances. You can see right here, when we are above the level, when we traded above the level, what the retest of the level, and then what would you see? The level acted as support. You can see right about here, we have the level of support. Right about here, the level of support. Like I said, a minimum of 3 times is okay. You can see right about here, the level as resistance. Level as resistance when we're beneath the level. And now you can see the very reason why we had price coming to the level and then what? We're currently seeing what? The nice sell-off from the level is because what? We're currently trading below the level. So one of two things, I'd love to see one of two things happen. Wait clearly for price to have what? A 1 hourly time frame bullish price rally to the upside, breaking above this green rectangle bar zone. And then when once price does that, pretty much give me what? A confirmed higher high, shifting the market structure on the 1 hourly time frame from bearish to bullish. When once that happens, having seen the price must have given me a high, I then would wait for some retracement, because I'm only going to buy from a potential higher low. Like I said, wait for the retracements to come into what? This would then be my hourly time frame, my intraday area of interest. Remember, guys, like I said, whatever we do on the higher time frames, we get to do on the smaller time frames. You have to understand that the market is fractal. Whatever happens on the higher time frames tends to happen on the lower time frames. It's just what? A different timing, guys. So we have what? The retracements coming to this level clearly would be my identified intraday hourly time frame area of interest. And then by the time price comes into the level where I most likely will have my potential higher low form of, what also would notice, but then would be the fact that what? We're clearly currently trading beneath the 50 exponential moving average. So by the time that does happen, what would tend to see take place is the 50 exponential moving average would have caught up with price somewhere at about this point. So we would have seen what clearly, that what? The candlesticks would have broken and closed back above the 50 exponential moving average. And then I have what? A nice retest of what? A nice retest of the intraday, the 1 hourly time frame area of interest, a nice retest of the 50 exponential moving average. In this case, because clearly price would then be trading above the 50 exponential moving average. The 50 exponential moving average is expected to act as a support. And just like we did right about here, when we have what? We have a clear case of what? A retest of this level acting as a support. You can see what? We had a nice rejection, a bullish momentum, what? And then price rally to the upside. By the time price does close above this level, giving me a higher high from the hourly time frame, and then a retest of this level, I would look to see what, like we had said, when once price comes into your identified area of interest, then the very next thing you want to do is what? You want to look for similar candlestick patterns. I cannot emphasize this enough, guys. So by the time price comes back to the level, comes back to the area of interest on the hourly time frame, comes back to the potential higher low, comes back to retest the 50 exponential moving average, in this case from the upside, expected to act as a support. I would love to see what? A rejection candlestick, hourly time frame rejection candlestick, hourly time frame bullish engulfing candlestick. And when that happens, just like it did right about here, then of course I would expect for the outcomes to also what? Also be similar. The bullish movement to then kick from that level, where I would most likely have myself a more higher risk to reward trade. So should this happen, let's say we have ourselves something like this at the break and then the retest, we have ourselves a rejection from the level, a bullish engulfing and all of that. You can see this would easily give me a 1 to 4, a 1 to 5 risk to reward trade, just scaling down to the lower time frames, as opposed to getting the buys off of the 4-hourly time frame bullish momentum candlestick, as I previously stated. Now, that's it, guys. This is how simply you can identify your area of interest and then what? Capitalize off, identify the area of interest to trade in line with what? The higher time frame directional bias. I pretty much would recommend, suggest that you go over this video a couple number of times just so you get a hang of the concept. Now, guys, leave me your thoughts, what you think about this video. And of course, I would be waiting out in the comment section to see your questions, should you have any, as regard this. Thanks for staying to the very end of this video. If you're not yet subscribed to the channel, please do well to hit the subscribe button, like this video, share this video, of course, and then make sure to turn on the notifications so you don't get to miss out on subsequent videos like this. See you in the next video, guys.